It doesn't just have a clever stock ticker, it's another one of these international companies consolidating all sorts of Silicon Valley style companies in one. You could call it a grab bag, something you might just want to grab onto as soon as you can. Imagine one company that's Uber, Venmo, and DoorDash all at once, across 8 countries for populations you don't often think about. That's Grab. That's the name. G-R-A-B. We love a clever stock ticker here at Money Beyond Borders. That's half the reason to invest. Just kidding. But you do wonder if there's some psychological help. If you're a market psychologist or the person who comes up with these stock tickers, let me know in the comments. I also like Moo. I'm Edward, this is Money Beyond Borders, where we find the companies and the markets few in the US are watching and back them with real research and a fun paper portfolio for education and anyone interested in diversifying their money outside of the United States of America. Quick reminder on the thesis. Jeremy Grantham said he wouldn't hold US equities right now. Emerging markets have surged over 40% over the last year, far outpacing the S&P. I've noticed a lot of people, Jeremy Grantham, Scott Galloway, the late Charlie Munger, among others, recommending diversifying your investments out of the US for a number of different reasons. All your eggs in the same basket is just the most obvious one. As someone with a YouTube channel, I thought, wait, that's what I do. I look at foreign investments for a small private investment firm. I'm also a content creator growing a YouTube channel. EdwardEffect, please subscribe. So why not build a show around it, expanding beyond borders? It's an educational show, which means funny money, not real money. For anything real, talk to your actual broker. This is for people here to learn, hopefully in a fun way. What you do with the information is your call. Galloway called this rotation the prediction he's most proud of getting right. Over the past year, international developed markets are up 48%, emerging markets 55%, against the S&P's 34%. In his words, international is winning, chicken dinner style. Today, we're looking at one of the biggest, most underappreciated regions in that story, Southeast Asia. Grab, ticker GRAB, trades on the NASDAQ. Headquartered in Singapore, it operates this super app over 8 countries: Cambodia, Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand, Vietnam. Ride-hailing, food and grocery delivery, and a full financial services arm, loan, payments, and a digital bank, all in this one app. Another surprising thing about some of these international tech companies, like some of them, Grab is profitable. Q1 2026 came in at $120 million, with adjusted EBITDA up 46% year over year to a record $154 million. Their 17th straight quarter of EBITDA growth. Revenue for the quarter was $955 million, up 24% year over year. The financial services arm specifically is exploding. Loan disbursements up 67% year over year, crossing $1 billion and on track to break even by the second half of the year. And here's the pattern you might have started to notice on this show by now. The stock has actually fallen hard, down 27% over the last year, hitting a 52-week low earlier this year, even while all that growth was happening. Same story with MercadoLibre a few episodes back. The business and the stock don't always move together. One more thing worth flagging. Grab just made its first move outside Southeast Asia, acquiring Delivery Hero's Food Panda business in Taiwan for $600 million. John. Delivery Hero is actually already on my radar for a future episode. A lot of interesting things going on in Taiwan, all sorts of ways. So this is a company we probably will end up circling back to from both directions. Now for the fun part, let's get to the paper portfolio. Okay, I just purchased 10,000 USD of Grab at 367. That gave us 2,717.39 shares. 10,000 USD. You can see here Kaspi, our Kazakhstan stock, is down from 10,000, and MercadoLibre is down a little bit also. This is only a few days though, but Grab, looking at the 1-year chart for Grab Holdings, the stock is down. Macro downtrend all the way down to June, where it hit it low of about 328. There's a high back in October, about 646. Currently it's horizontal. You don't really get an advantage for buying a cheaper stock because they have fractional shares. Now you could buy a US stock. You can see Tesla right here is at 331, Apple's at 312, and this is at $3, but you could buy a fraction of that. The fractional ownership erases the advantage due to percentage growth. All right, so that was our paper trade for today. Again, pretty quick, but this is only episode 3. There's not a whole lot to talk about still. We just bought our third stock. And I will continue adding to that 10,000 each time so we can compare in an educational format. That's episode 3. Next episode, a company Warren Buffett bought into years ago, then walked away from completely. Why he left makes for an interesting story. I'm not a financial advisor, and nothing here is personalized financial advice. This research is part of what I do for work, and sharing it publicly doesn't turn it into a recommendation for your money. Nothing here is a recommendation to buy or sell anything specific. This is research, frameworks, education, and a paper portfolio. Not real money, not a track record. Talk to a licensed professional before you do anything on your own, and see you next week.